Well, maybe not so much. I mean, obviously, you're right in saying that the shipping industry is one player of the overall logistic chain. We are bringing whatever we can in order to play our part in the current situation that is putting pressure, clearly, on our consumers in order for them to get the cargo that they desperately need. So we are bringing in vessels, we are bringing in containers, but also we need to think longer term, and we need to think about the fact that our industry needs to change and needs to be more carbon friendly. But there is a need for replacement capacity. So today, ordering new building is also a long-term bet, not only a short-term action.
A 40-foot container, which I don't know, at the height of the crisis would have been like $2,000 for a journey. Now around about $15,000 as well. Do you see the kind of inflation increases we've had in containers and shipping costs globally? Do you see any sign yet of it abating? Of course, with the holiday season not that far away.
You're right. Today we see rates that are very high on the spot market, but let's also remind ourselves that we have a significant portion of our volume that are long-term contracted by our customers. So yes, there is an increased pressure. We are still subject to the fundamental dynamics of our industries, which are very much, supply demand driven. So the congestion is putting pressure on the supply, as we all know. The demand is extremely strong in the US, with the retailers and the inventory to sales ratio being very low, and pre-Christmas shopping. We are as a shipping company entering into what we call our peak season. So all those drivers actually contribute to soaring freight rates. Still, by and large, the transportation cost of that is part of the overall cost of an end product is still marginally low. It depends obviously on the product we're talking about. But what we see today is that the situation to normalize will take time. It is not a matter of weeks, it is more a matter of months. Even if we were tomorrow to wake up in a COVID-19 free world, all the congestion that needs to be eased and cured will take time. And we see that situation going on for the remainder of the year and possibly into 2022.
Xavier, that does set the scene for some very strong results in future. Looking through your numbers today, 119% jump on the freight rate, and that was Q2 this year versus Q2 last year. A completely different situation playing out versus previous years. What is a new normal? What sort of percentage increases should we expect in that freight rate in, say, Q3, Q4 and into next year?
I'm not so sure that the new normal, we will see it in Q3, Q4. And like I said, I mean, for as long as we have all those supply chain constraints, there will still be those pressure on supply that will push the rates high. So the new normal will come, we really do think, a little bit later. But for indeed, and this is the reason why we were capable to increase our guidance, we have today already very good visibility over the third quarters. The bookings are already in our systems. The transit time, if we look at a journey between Asia to the US, it takes 11 weeks. So the vessels that are departing today will be arriving at their destination in 2 months. So we have good visibility in this respect. The billion-dollar question is indeed, what will be the new normal post-COVID in an environment which is now hopefully free from this issue and this problem? We surely do not think that the new normal will be back to where it was pre-COVID, which was an abnormal situation where the shipping companies were actually barely surviving.
Xavier, at the same time, there are huge ESG considerations, and you've pointed out that you're expanding your LNG fueled fleet. Just give us a sense of what the industry is doing with these super strong profits versus what they've had in the past, and how they're re-gearing to try and meet greater ESG principles.
You're right. This is a #1 priority, at least for us at ZIM. We have the benefit of having operated an asset-light model, meaning that we do not own ship today. We charter in capacity. But when we see the pressure that is increasing also on the supply side, we want to make sure that when we secure long-term tonnage, we go for the greener possible solution there is. And the greener possible solution there is today is clearly LNG. LNG is, in terms of carbon emissions, 30% more efficient than a traditional diesel engine. And we want to make sure that we operate and we accelerate our transition towards a more carbon-friendly type of shipping transportation. So we have indeed entered into a contract for more than 20 vessels that will be LNG powered, that we will take delivery from in 2023 and onwards to 2024, so that when 2024 comes, we will be operating close to 50% of our fleet on LNG, positioning us at the top of the league in terms of carbon intensity, carbon emission. And we are absolutely certain that the pressure, not only from the regulator, actually this is not the primary driver. Our customers demand it, our investors demand it, our financiers demand it. So we need to take action sooner rather than later, and this is what we are doing by resolutely opting for LNG.